What's your take on CDs?
When do you prefer gold versus real estate?
Do you have any suggestions on short-term investment? Since I'm on immigration, I want to make sure that I'm not making any risky investment.
Can I buy the index fund only on one website?
Since my main work environment is really stressful.
In today's episode, I'm joined by two successful friends who are just starting their journey in personal finance. They prefer to stay off camera, but their questions are real and relatable. Let's dive in.
So I'm working as a physical therapist since 3 years as a full-time PT, and I have some savings, and I'm wondering what could be the safest way to invest since they are sitting on the saving account. And since I'm on immigration, I want to make sure that I'm not making any risky investment. What could be my options?
So right now your goal is just to make the money work for you, and that's about it. Do you have any particular goals as to this money I should be able to buy a house with it or a car with it or take vacations with it? Do you have any particular goals associated with this money, or is it just I need to grow, that's it?
Um, the first goal is like I need to grow them enough that I can invest maybe in the house or in the car eventually. But right now, just want to grow them, but in the safer way where I don't have to put too much mental or physical efforts since my main work environment is really stressful. So I want to make sure that I don't have to put too much stress there also.
Okay, so you just want to grow for now. You don't. I mean, you have goals, but you don't necessarily need to kind of want to associate this money. Or right now, you just want to grow
Or
money,
maybe
right?
I can say that it might not be enough money to buy a house, the kind of house maybe I want,
Okay.
or it's not enough money in saving that maybe enough to buy a car, the kind of car I want to buy.
Okay.
So I'm thinking to wait for some other years to save. But the way it's just sitting there, like earning and saving, I feel like at the same time there should be some kind of investment, money investment
Totally.
that can speed up the growth of
Yeah,
money.
yeah. So usually when we do any sort of financial planning, of course, I'm not a professional, but whoever I talk to and the way we approach this is, do you have your emergency fund taken care of? Like usually it is whatever your monthly expenses is multiplied by 6, that is 6 months of expenses.
Mhm.
We need that kind of money to be at a safe place. Either it is CD. I mean, I don't recommend CD. I don't like CD. CD is it gives very minimum returns, so I don't like it. But there are other vehicles where you can just park that money so that in case life happens, never know what is going to happen. So just in case, if you're not here, but if somebody's car broke down or whatever other things, you need to have. It is good to have 6 months of emergency fund parked somewhere. And usually where I would park is it will solve both of the purposes. What I'm looking for, what I usually suggest is 6 months of emergency fund, and what you are looking for is growth for your money, right? So this high yield savings account, you might have heard of these things. High yield savings account is basically a savings account, but it is sitting in that savings account, and usually our banks offer what 0.5 1% maximum, that kind of returns, right? But these banks which offer high yield savings account, they have the highest is 4.86%. So they offer 4.86. That's a pretty good yield. And these are all FDIC insured. So your money up to $250,000 is already kind of covered under this FDIC. So I think that's a good option to start. And you can start 4.5% ish from that high yield saving account. I think that should be the first step.
What should be the next step? I don't have much experience in investing.
So if you have not done investing, and I know it gets overwhelming as to there are so many options: real estate and bonds and stocks and mutual funds and index funds and whatnot, right? There are so many options. So how much familiar are you with stock market and all of that?
Not much in States.
Mutual fund. So you might have heard about mutual funds, right?
I have.
Have you invested in mutual fund?
Not very.
Okay. So if we move on to the next step of now investing that money, I mean, the way I do it is we have to associate our fund. Yeah.
So you're investing the money after you've taken care of the saving, the emergency fund.
Yeah.
Okay.
Emergency fund, 6 months emergency fund is in high yield saving account. It is set. We are not touching that. Now, rest of the money, because you are earning as well, right? You will have monthly money coming in and everything is just sitting in the saving.
Why not just keep in saving account? It is safe there.
There is something called inflation, right? Inflation is, I mean, in layman term, it is things are getting expensive.
Yeah.
We say that. And inflation is usually in the US, it has been 3% over the last, I think, 100 years or so. Your $100 sitting in the bank tomorrow will be, next year will be $97. And after that, it will be $94. Yeah, $2, $3 doesn't matter, but in long run, it matters a lot, right? So that's why you need to start investing.
What is our safest bet for investing?
The safest bet is investing as S&P 500.
And what is S&P 500?
S&P 500 is the top 500 companies in the US. So if someone says go and invest in stock market, okay, which company are you going to buy? I don't know. I don't. Okay, I mean Coca-Cola is doing good today. I don't know what is going to happen tomorrow.
Yeah.
Right? Tesla is good today. I don't know what is going to happen in 5 years.
Yeah.
The way I started was just investing in S&P 500, and the S&P 500 is 500 top US companies. So that is a basket of stock which has 500 stocks in that basket. If a company does poorly, they throw out that company and bring a better company which qualifies for that first 500. So that first 500 will always be there. It has been there for years now, and it will always be there. It is a good diversification of all sort of stocks. It has tech stocks, it has pharmaceutical, it has Coke, it has Tesla, it has all sort of diversification in it. Whatever money you're getting, put it in that, we call it S&P 500 index fund. Index fund means, sorry, let me know if I'm going too technical, okay?
No, I need to learn more.
No, but let me know. I mean, I can just start bombarding so much information and I want it to make sense. Otherwise, what's the point?
No. Yeah.
So what I would do is invest whatever money I want to invest in that, and you can just open account on Vanguard or Schwab's. Vanguard is good enough. So these are the companies where you will open your account, link your bank account with Vanguard, transfer your money there, and start buying S&P 500. If you are bringing in $100,000 in that account.
If I have some money in my bank, should I invest lump sum?
So what I usually do, what I have done is dollar cost averaging. Dollar cost averaging means once you get paid on first of the month, by fourth I will have things automated. That every fourth of the month I'll put in $1,000 in that. Doesn't matter if the market is up, doesn't matter if the market is down. I'll keep putting it. And over the past 100 years, S&P 500 has given 10%. Last year, it has given 23, 24%. 1 year before that, again, it was 20, 22%. Minimum, I mean, it is possible that like can go down by 15, 20%. But if your time horizon is long, you don't need it immediately. S&P 500 is the safest bet.
Can I buy the index fund only on one website?
Different companies offer different index funds. Like you understood S&P 500, the fundamentals, right?
Yes.
Now the product is called index fund, and different companies offer different index fund. Vanguard will offer you one, Schwab will offer you one, Fidelity will offer you one. There are so many companies.
Who should we go with then?
So whoever charges the least amount of fees, we usually should go with them. And that is Vanguard is one of the companies who offer minimum expense ratio. That's what we call it. In normal language, it is fees basically. Someone is managing your fund, so you're paying some sort of fees to them. So that's what the fees is.
Once you open an account, you link your bank account with it, and how it goes from there.
Once your account is linked, then you will go in your Vanguard. You will say, or transfer money from my bank to here, 10,000, 5,000. Just start with $100 and see how it goes. Just the way you transfer money from one bank account to other bank account, it is pretty similar.
We don't have to choose any bank from those top 500. We just put the money into this account, and then how say it's like investing in the stock only.
Vanguard is a company, a brokerage firm. Through them, you can either buy individual stock or buy mutual funds, or this is S&P 500 is an index fund. It is kind of a mutual fund. So you can buy that one as well. So Vanguard is kind of a Walmart, and Walmart has different products in it.
Okay.
So you can buy whatever you want to buy. Am I being clear?
Yes. Yes.
Okay. And what was your next question?
What would be the safest option between index fund or mutual funds options or individually invest in a particular company stocks?
Individuals, definitely not.
Mm-hmm.
I have done all sort of mistakes in the past. There will be people who will tell it is, who will say that I bought this one at $2 and now it is $10 and bragging about it. I think it just gives you bragging rights.
Mm-hmm.
I don't know. Are they really comfortable showing their accounts and how much they're investing? It is a tough job to select any stock market.
Yeah.
Very few people earn money in this if you try to trade.
Mm-hmm.
So I think if you want to go long term and invest, S&P 500 index fund is the way to go. There are other sort of index funds too. Index means they're following some sort of bigger index.
What are other index funds?
So S&P 500 is one. Then there is something total US stock market. So it is a fund which invests in the entire stock market. Whatever publicly traded companies are there, it will put the money in all of those companies. So that is ultra diversification. Like putting all money in one stock is super risky, right? You need to diversify. So S&P 500 is a diversification, and you are going entire US market is too much diversification, and there is one which goes entire world as well. So you have all sort of things, but we are living in the US. I think S&P 500 index fund is a good one. It will reduce your risk. So with doing this, we should at least count for like 5 to 10 years, you say? It is better if, yeah, that should be the time horizon, at least 5 to 6 years. That's where you will see some sort of growth. Otherwise, you'll say, okay, $100, I have put in $100, next year 110. I don't know how much it matters for you, $10,000, but the next year that 110 will go to work for you, and in 1 year it will give you 121, then 100 or 122, and then 122 will go to work.
How long would it take for the money to be doubled?
So there is something called a rule of 72. So if you divide 72 by any number, say 18. Okay. 72 divided by 18 is 4, right? So that means if you are getting 18% rate of return, your money will double every 4 years. If your rate of return is 72 divided by 9 is, so 8 years. Your money will double every 8 years. Yeah. If it is 10%, then every 7 years. Every 7 years. So the fun happens once you hit that 7 years, then the money really start showing the compounding effect, and that's a big deal. So that's where the fun happens. So if someone is just investing for 1 or 2 years, that's really not investing to me. Long term is at least 6 7 years. That's the place.
Two questions. So if you put in S&P, is it, can you put by yourself, or you can you have to go through someone? And once you put the money, is it locked for that period, or like CD or FD, or it's like open, just remote?
It is always open. It is never locked. Vanguard is a
Yeah.
brokerage firm, right?
Yeah.
So you buy it through them. You cannot buy just sitting. My bank has money, and I will go and buy S&P 500. Where are you gonna go? If you want to buy bread, you cannot buy bread from the manufacturer. You have to go to Walmart or Target. So just like that, you have to go to some shop to buy those stocks. Or
so what is that app where everyone goes to get
Robinhood.
Yeah, so
Robinhood.
can you
Yeah.
so can you go
Yes.
through that also and
Yeah.
do the
There are so many. Robinhood, Vanguard.
so it is regardless of if you go through Vanguard or that
Question.
app, it's still liquid. It's
It
just
is
open,
always
there is
liquid,
no.
but the bigger problem is just the way the app looks, and it is so kind of trading friendly. It kind of entice you to get into trading more. Vanguard is a old school, old looking website, safe. Just go there, buy it with minimum, like literally 0.03 or something. That's how their fees will be 0.02, 0.03. Very, very low. Like in
Is there cost to open the account through them?
I think maybe $300 or $500 to open the account. But it is going towards your, it's not a fees or anything. It is going towards your investment. And then there are bigger, they are called Admiral shares, which is the minimum is $3,000. But we don't have to worry about it. At the end, it is pretty similar funds. They give the same sort of return, so you don't have to worry about it right now. Do you have any suggestions on short-term investment? Just because of the concern of being on immigration,
let's say like 1 year or 2 year short term, 6 months?
1 2 years or 6 months, this is pretty short term. If you put $100,000 now, and if the market tanks, everyone has been waiting for the market to tank since 2008, since it hasn't. What if it goes down by 25%? How will you feel losing 25%? And if you have to go, not very good,
No.
right? But if it is too risky for you, I think this high yield savings account, those are good enough. Their interest rate can vary because the Fed has their meetings and they will change the interest rates, and depending on that, the banks will change it too. But relatively, the high yield savings account is a much better place where you can park your money and enjoy your 3.5, 4.5%, and that is liquid as well. Money and Vanguard, when you get your money from your bank account to Vanguard, it stores your money in the brokerage account. That also gives you this kind of returns. Just to park your money in Vanguard itself, it gives you good 3-4%. That's also fine, but you have to compare it who offers better. But for short term, that's what my short term will be, nothing.
So, high yield saving account or Vanguard?
I think the high yield savings accounts are much better. It is offering much better rates right now. So for short term, that's the place to go. Then you don't have to worry about it. Again, the FDIC insured is 250,000. So if someone has $700,000, they shouldn't be putting all $700 in one bank, because one bank will cover 250 only. So split it across multiple banks so that 250 is not capped.
What's your take on CDs?
Bad investment.
And why so bad?
It is not even beating the inflation. It is eating your money. It is taking $100 from you. It is giving you $2, and it is using your money and giving as a loan, as a car loan to other people, and getting $5 or $7 from them. And for housing, it is giving what, $7. And if they offer credit card services, then they are getting $15 to $20 on your money. So that's how they are making their money. So financially speaking, it's not prudent idea to go with CDs. It should at least beat the inflation. And if you have other products which are beating the inflation comprehensively, then why not go with them? Why put it in CD?
Those are the high yield accounts, and those are safe, right?
High yield savings account are just savings account. It's nothing different.
What the minimum amount we can start that accounts with? Or every bank has a different.
Every bank has different thing, but I can this SoFi I was talking about, it is minimum balance is zero. You can start with zero. Maximum they will have is 200, 300. It's not more than that. If you are putting in 300, they are giving you 300 bonus as well. So there are a lot of banks like, and this will be all online, so they won't necessarily have a local branch. It will be all online. I think that's how they are able to do this thing, because they don't have physical offices.
When do you prefer gold versus real estate versus market?
I always prefer market, as you all know.
But if somebody wants to not keep their eggs in one basket,
Gold is a liability to me. I mean, buy that gold and put it in the lockers and keep it safe, and it is a physical product. You have to keep it safe. If you go in Vanguard, there will be gold ETF, which is exchange traded fund. So basically, in very simple language, it is a stock for gold. So you can buy the same amount of gold, whatever you want to invest. It will give you, if gold is going up 10% every year or 7% every year, it will give you that benefit without really physically holding the gold. So that is that. Again, for real estate also, REIT, we were talking right this morning. It is again the same thing. A company holds, they buy multiple properties, corporate properties, rental real estate, commercial warehouse. They hold all of that for you. They buy it for you. Basically, when they get the rental, they will share that as a dividend with you. I need your little help here. Please rate this video from 1 to 10, 10 being the best, 1 being the worst. And if the rating is less than 7, could you please mention what I could have done better in this video? Please don't forget to like and subscribe. Your fired friend Sushant, signing off.